Thank you for attending this quantitative disclosure summary presentation. I am Kawai in JCC's Clearing Planning Department, and I will be leading today's call. Today's meeting will be around 30 minutes, starting with an overview of this quarter, followed by the topic of this quarter, and then a briefing on the major risk points. Finally, we will try to address as many of your questions as possible within the schedule. On this webinar, as a special topic for this quarter, we will present a margin simulation for a stressed market event. All of the meeting attendees will be on mute. But if you have any questions, please let us know using the Webex Q&A function. To begin with, Mr. Miyauchi, JSCC's CRO, will give an overview of the quantitative disclosures from the first quarter of 2023.
Thank you. JSCC keeps 64 billion yen of skin in the game, which is the same as the previous quarter, mostly from JSCC's own capital, but it also includes contributions from affiliated exchanges. On aggregate, these were equal to 76.0% of JSCC's shareholder equity. During this quarter, stress test breaches where the risk amount in extreme but plausible market conditions exceeded pre-funded resources were observed on 3 days for cash security clearing service, 2 days for precious metal clearing service, and 4 days for the energy clearing service. All of the breaches were resolved on the next business day through the requirement for additional collateral. As for margin backtesting, the cover ratio for JGB futures and options fell below 99%, and for IRS, it fell below 99.5% this quarter due to the sharp interest rate fluctuations caused by instability of banking sector in March. We will cover this later today. Other than that, all other clearing services were comfortably within our targets. There were neither liquidity stress testing breaches nor any participant default during this quarter. JSCC experienced no suspension of the clearing services due to the system failure or any other reasons during the past 12 months period. Now I will pass back to Ms. Kawai.
Thank you. Page 7 is the topic of this quarter, margin simulation upon stress period recurrence. Given the current volatile interest rate markets, JCC conducted a simulation of the estimated initial margin levels in case certain historical stress events recur in the current market environment. In this summary, we present the simulation for Nikkei 225 futures and 10-year JGB futures. The assumed stress event is the period of the global financial crisis from September 1, 2008 to March 2, 2009, which generally corresponds to the period of highest historical volatility for the products that are the subject of the simulation. We have provided the results of these simulations to clearing participants for them to use as a reference in their house and customer position risk management to enable them to better understand the impact that future market fluctuations may have on their portfolios. This is the same we did last quarter, following the sharp interest rate fluctuations we witnessed due to the BOJ's policy change in December 2022. From results of these simulations, we estimate that if the Lehman collapse occurred today in the current market environment, the initial margin levels for Nikkei 225 futures could double. However, we see only a limited impact on the initial margin levels for 10-year JGB futures. Now, back to the PQD. Page 8 is an introduction of JSCC's service structure. Our clearing services are divided into 14 categories according to the governing regulations and product features. with each maintaining its own default funds. Please note that in this presentation, some data is presented across multiple categories as the resources may be shared. Page 9 shows financial resources for participant default, called Skin in the Game or SIG, and contributions from relevant exchanges and PTSs. Most of the exchange contribution is from entities in the same corporate group as JSCC, namely TSE, OSE, and TOCOM. As shown in the left-hand table, JSCC's Skin in the Game for ETP non-commodity was 20 billion yen, which is shared by all of the relevant clearing categories. And for stress testing, the sufficiency of the financial resources for each category was tested by prorating these shared resources according to the relevant default fund amount for each category. Page 10 shows the ratio of SIG to JSCC's capital. The left-hand graph shows the SIG to be used before the mutualized default fund, or DF, and the right-hand graph shows the SIG to be used before the default fund plus alongside default fund of non-defaulting participants on a pro rata basis. SIG before default fund on the left ranges from 19 to 49% of shareholder equity, and SIG before and alongside default fund on the right is from 39 to 98% of shareholder equity. So JSCC contributes relatively large amounts of shareholder equity to SIG compared to other major CCPs, which shows a strong commitment to risk management. Page 11 shows the required default fund, which would be mutualized among non-defaulting participants. The graph on this page shows the ratio of SIG and contributions from exchanges to DF from members. The total DF requirement for all ETP, namely the aggregate of ETP non-commodity, in the upper left and ETP commodity was about 444 billion yen. The ETP non-commodity DF increased by 93 billion, with the majority of this DF attributed to the index, future and option OSE. The IRS DF decreased from the beginning of 2022, and it again hit a record low in this quarter. This was mainly because the stress loss over initial margin was slowing, decreased as a result of an increase in initial margin, which hit a record high in this quarter. While the stress scenarios would not be revised to swiftly reflect the recent market move, the IM requirement increased due to the recent market volatility. Thus, the DF, which is equal to stress loss over IM requirement, decreased. We will touch on this later as part of the review of IM on page 16. The category with the largest DF requirement was ETP non-commodity in the upper left chart, with an amount of about 430 million yen, which is mostly from ETP index futures options with an amount of 390 billion yen. On page 12, the data is listed for these graphs, and the amount of potential assessment, or so-called cash call, is also provided. As stated in the footnote, cash call for any ETD is capped at 3 times the default fund requirement, and for OTC product, it is capped at 1 time the default fund requirement. Page 13 shows KCCP. This page is newly added from the previous quarter, as JSCC started applying BCBS 282 or SACCAR to the KCCP calculations for the PFMI quantitative disclosure in December 2022. Page 14 shows the largest value and mean value of the SLOIM, which is the stress risk amount exceeding IM deposited including add-ons. Please note that due to the PFMI quantitative disclosure definitions, the default fund on page 11 is the value at the end of the quarter, but the SLOIM on page 14 is the largest or mean value during the past 12 months period. JSCC's default assumption is covered too, except for any listed commodity derivative other than OSE Petroleum, which is the largest one plus the 5 smallest firms in the net assets. Among all clearing service categories, ETP index futures options had the largest SLOIM, with a peak value of 415 billion yen. Page 15 shows the number of days there was a shortfall in the stress testing of pre-funded resources, and the largest shortfall. Breaches were observed on 3 days for cash securities, 2 days for precious metals, and 4 days for energy. But these breaches were all resolved on the next business day through the required additional collateral. Page 16 shows the required and excess IM amounts. The dark blue is the house IM requirement and dark orange shows clients. Light blue is the excess margin for house accounts and light orange shows client accounts. The required amount of OSE listed ETP, IRS, and OTC JGB were the largest at between 1.9 to 2.6 trillion yen. The IM for IRS and OTC JGB has been increasing since the beginning of 2022 due to the more volatile interest rate environment. Looking at the breakdown between house and clients, OSE listed ETP was driven mostly by clients. IRS was evenly split between house and clients, and OTC JGB was mostly house. This trend has remained unchanged for quite a long time. Moreover, the client's excess margin held was quite large in OSE listed ETP and IRS, which has almost not changed significantly. The data used for the graph on page 16 is shown on page 17 and 18. Now, page 19 shows the number of breaches in IM backtesting for the past 12 months period. As mentioned earlier, the sharp interest rate fluctuations were seen due to heightened financial instability in the US, and it resulted in breaches for the ETP JGB, IRS, and OTC JGB seen in the upper chart. In response, as for OTC JGB, JSCC called intraday initial margin on March 14th. No breach occurred in the stress testing of the loss compensation financing sources, and all settlements and collateral deliveries were performed without incident. Due to the sharp interest rate fluctuation, the lower table on this page shows JSCC did not meet its target 99% cover ratio for ETP JGB and 99.5% cover ratio for IRS. In response, for ETP JGB futures and options, JSCC discussed with our participants and devised a parameter used in the setting of the span parameters for the 10-year JGB group from this Monday, June 12th. During the 5-year look-back period, which we refer to when setting the price scan range for the 10-year JGB futures group, there was a long period of low volatility. So, to compensate for this, we changed the period we observe for price fluctuation rate on stress scenario days. We were previously utilizing historical market data since 2007 for the price fluctuation rates on stress scenario rate days. However, interest rate volatility has recently been on a rising trend. So we now consider it appropriate to use historical market data since 1985 when the 10-year JGB futures contract was initially listed. According to the simulation results, we confirmed that the cover ratio against market fluctuation for 10-year JGB group would be improved if we adopt the proposed revision. JCC is considering and have had a discussion about the partial revision of the methodology of initial margin for IRS. Please note that JCC sets more conservative standards of 99.5% for CDS and IRS. The upper chart on page 20 shows the largest breaches in the past 12 months, which are about 15 billion yen for ETP JGB futures options, 7 billion for energy, 55 billion yen for IRS, and 62 billion yen for OTC JGB. This test only looks at the base IM requirement without add-ons. JSCC has confirmed that these breaches would have been covered by resources such as IM add-ons. Excess IM deposit or SIG and the whole amount of the default fund would have remained almost untouched. The lower chart of this page shows the largest breaches in the past 3 months. JSCC started disclosing the figures on qualitative notes sheet of our disclosure from the previous quarter in December 2022. The upper chart on page 21 shows the quarterly largest value of variation margin or VM paid to JSCC, and the lower chart shows the largest value of IM Gold during each quarter. The largest volume for OTC JGB during quarter 1, 2023 was observed on the business day following the March 14th due to the sharp interest rate fluctuations that I mentioned earlier. You can see that the volume was much larger than the IM Gold, except for the IM Gold for OTC JGB during quarter 2 2022 due to an emergency intraday IM Gold that was previously reported. Please note that while VM needs to be deposited and settled in cash, IM may be deposited in cash as well as various securities and other instruments, giving our participants some flexibility for funding. Page 22 and 23 show the composition of collateral used for IM deposit. On page 22, you can see that the majority of ETP IM was cash, as shown in dark blue and dark orange, but some was in JGB and stocks, shown in gray and yellow. Cash collateral was held at either the central bank or at selected commercial banks. The secured cash deposited at commercial banks in dark orange was held in settlement account of commercial banks, which are fully covered by the Japanese Deposit Insurance Scheme. On page 23, you can see that the majority of OTC IM was deposited in cash, but with some JGBs. Deposit of stocks are not allowed for these OTC categories. The entire amount of cash collateral for OTC JGB was held in the central bank, and for CDS and IRS, the participants or customers may select their custodian for cash collateral, i.e. Japanese Trust account or the central bank account in the name of JSCC. The secured cash deposited at commercial banks in dark orange for CDS and IRS was held in such trust account, which is legally protected from the bankruptcy of JSCC as well as the participant. Page 24 separates cash deposits into those for IM and DF. We are holding a total of about 8.9 trillion yen of cash collateral across all the categories. Next, Page 25 shows the custodians for this cash collateral, with almost 100% held in either the central bank account, settlement accounts covered by deposit insurance, or the trust account. Page 26 covers liquidity risk management. Please note JCC's liquidity risk appetite is cover 2, but this data is presented based on cover 1, in accordance with the PQD guidance. And while JCC separately calculates and manages default funds by category for liquidity risk, JCC calculates and manages across categories. However, for OTC-JGB, JCC has established a separate liquidity framework using repo with clearing participants. Because the transactions under this category involve large amounts of principal settlement. In the chart, you can see that the liquid financial resources significantly exceed the required amount, and no breaches were reported in the liquidity stress testing. At the time of a participant default, at least the half portion of non-cash collateral could be liquidated and applied to the settlement with survivors. However, in this data, non-cash collateral is not deducted either from JCC's payment obligation or the estimated payment or the actual payment. Because to be conservative, we consider that it could be difficult to swiftly liquidate such collateral on the date of default. So we do not regard such collateral as available liquidity resources. Page 27 shows the liquidity resources for the categories other than OTC-JGB. Resources reported as cash at our central bank on the first line was secured cash at the commercial banks. On the third line include cash in the DF related to ETP, where at least 50% of the required DF minus 1 billion yen must be in cash. The unsecured cash on the fourth line shows JCC's own funds available for use as liquid financial resources following a participant default. The unsecured committed lines of credit on the sixth line shows the committed liquidity available from JCC's parent company and multiple commercial banks that have been designated as fund settlement banks, and total to more than 1.5 trillion yen. Now, we will move on to Q&A. If you have any additional questions, please let us know using Q&A function.
Yes, we received 2 questions about margin breaches in advance. The first one is, could you please elaborate on the IRS margin breaches and potential margin model reviews that such breaches could lead to? Thank you for the question. Our answer is that our IRS margin model uses data from historical periods of significant interest rate volatility as stress scenarios, in addition to the data from the 5-year look-back period, in order to mitigate procyclical margin change and keep our margin level robust. But, contrary to our expectations, the cover ratio for IRS margin back test fell below our target confidence level, mainly due to the breaches mismatch, as explained earlier. In response to the breaches, JCC held a meeting with clearing members this Tuesday and has proposed workaround measures as well as full-scale measures. The workaround measures include a change of a blending number of stress scenarios from 2 to 4. Yesterday, we circulated a notice of this proposed change on our web portal, both in Japanese and in English. This change is expected to raise the total required base initial margin by about 3% and will go live from July 10th. On the other hand, the proposed full-scale measures will be more anti-procyclical and also needed to enhance our initial margin calculation system. Therefore, we are planning to go live with these in the first half of next year, following further discussions with our clearing members.
Second one is there are numerous margin breaches for IRS and JGB segment. Is JCC considering any changes for GP? So, as I just answered about IRS, I am answering about JGB futures now. Thank you for the questions. Our answer is that JCC revised spam parameter setting method for JGB futures from this week, following the discussion with clearing members. JCC held a meeting with clearing members Tuesday last week and circulated a notice on our web portal, both in Japanese and in English. We also uploaded the same information on our website. As explained earlier, we changed stress scenario observation period from since 2009 to since the listing date of respective futures contract. In the case of 10-year JGB futures group, it is since 1985. Because these old data include higher volatile data, the price scan range was raised by about 10%. The spam margin level per notional was 1.68% last week and 1.8% this week. On the other hand, as for OTC JGB, we are not considering the margin model change because our targeted backtesting confidence level is still satisfied. We now received another question. Question is, which is an event on IRS will be also reviewed as part of the new bar model. Thank you for the question. But our new bar model, which is scheduled to go live from this November, only covers listed futures and options. So this IRS breach is not relevant to our new model. But as I explained now, we could introduce some measures on IRS margin models.
With that, I would like to wrap up today's webinar. Well, we are sorry that we couldn't answer all the questions due to the time constraint. For some questions we couldn't answer in this session, we'd answer directly after the call. And also, please do not hesitate to contact us if you have any additional questions after the call. Well, just for your information, you can find today's material recording of past webinar as well as the minutes of Q&A sessions on the same page of PQD data on our website. So please visit our website if you're interested. Thank you for your time again. We look forward to posting next webinar and speak to you soon. Thank you.